The cryptocurrency market as of early June 2025 finds itself in a familiar state of watchful anticipation. Bitcoin, the pioneering digital asset, continues to dictate the broader market sentiment. Its price movements often create ripple effects across the entire ecosystem of altcoins. Understanding Bitcoin's current position is therefore not just about one asset, it's about gauging the health and potential direction of thousands of digital currencies. Many investors and traders look to Bitcoin as a leading indicator. When Bitcoin shows strength, confidence tends to flow into other projects. Conversely, if Bitcoin experiences a significant downturn, the rest of the market typically follows suit. Bitcoin's dominance remains a fundamental aspect of the crypto space. Its established network and increasing institutional adoption provide it with a certain gravitational pull. This means that even projects with unique technological advancements or strong communities can find their market performance tethered to Bitcoin's trends. The current market structure suggests that Bitcoin is trading near a pivotal point. This juncture could lead to a sustained rally if key resistance levels are broken, or a deeper correction if support fails to hold. The implications for the broader market are significant in either scenario, as capital flows often follow Bitcoin's lead. The coming weeks are particularly critical. Several macroeconomic factors alongside network-specific developments could contribute to increased volatility. Regulatory discussions continue in various jurisdictions, and any significant news, positive or negative, can impact investor confidence, which often first manifests in Bitcoin's price. Furthermore, the flow of institutional capital into Bitcoin, often through instruments like ETFs, provides a steady, albeit sometimes cautious, demand. This demand is constantly weighed against profit-taking from earlier investors and the speculative trading that characterizes much of the market. The balance of these forces is currently quite delicate, making careful observation paramount for anyone involved in the digital asset space. Therefore, as we delve into the specifics of Bitcoin and other major cryptocurrencies, it's essential to keep this overarching influence in mind. Bitcoin is not just another cryptocurrency, it is often the tide that lifts or lowers all boats in this nascent financial ocean. Its stability or volatility sets the tone. The market is currently digesting recent gains and assessing whether the underlying strength is sufficient to propel prices higher, or if a period of consolidation or correction is more likely. Bitcoin's price action has been characterized by attempts to breach significant resistance while testing crucial support zones. As of today, Bitcoin is trading around $68,500. The $70,000 to $71,500 zone is a key resistance level. On the downside, $66,000 is a crucial support level. A breach below this could lead to a decline towards $64,000. For bullish traders, a breakout above $71,500 is a key signal. For bearish traders, a failure at resistance or a break below $66,000 presents shorting opportunities. The broader market remains cautiously optimistic due to ongoing adoption and maturation of the asset class. Ethereum, the second largest cryptocurrency by market capitalization, has been trading sideways for weeks, hovering around $3,750. This suggests consolidation after upward movements fueled by Ethereum ETF developments. The market is digesting these developments, looking for the next catalyst. This phase often precedes a significant move, either up or down. Key resistance is around $3,950 to $4,000. A break above $4,000 with strong volume would be bullish. Support is at $3,600, with buyers stepping in at this level. A drop below $3,300 could signal a more substantial correction. Traders are closely watching these boundaries for their next moves. Ethereum's strong fundamentals and vast ecosystem remain key. The next 2 weeks will be crucial for a decisive move. Solana's ascent bullish signals amidst volatility. Solana, or SOL, has shown resilience and positive momentum, trading around $170. Technical indicators like the RSI suggest a short-term bullish divergence. Key support levels are $155 and $145. The $155 level has acted as a local bottom. Resistance is near $185. A break above $185 could signal further gains. XRP's resistance battle analyzing critical price ceilings. XRP, the digital asset associated with Ripple, continues to navigate a challenging market environment, largely influenced by its long-standing legal battle in the United States and its struggle to break significant resistance levels. As of early June 2025, XRP is trading around 52 cents. This price point places it precariously below a critical resistance zone that has capped its upward ambitions for an extended period. The primary resistance for XRP is the formidable 55 to 57 cent area. This zone has repeatedly thwarted breakout attempts, and a strong, sustained move above this ceiling is necessary for any meaningful bullish continuation. A concerning technical pattern that traders are monitoring for XRP is the potential formation of a head and shoulders top if it fails to decisively break above the 55 to 57 cent resistance soon and subsequently falls below key support. Such a pattern is typically bearish and could signal a more prolonged downturn. For this pattern to be confirmed, XRP would need to form a right shoulder, likely by failing another attempt at the resistance, and then break below the neckline, which could be forming around the 48 to 50 cent support area. This scenario would suggest significant selling pressure still dominates. Key support levels for XRP are currently found at 50 cents and, more critically, at 48 cents. The 50-cent level offers immediate psychological support, but the 48-cent mark has historically been a more robust demand zone. If XRP breaks below 48 cents, especially if this confirms a head and shoulders pattern, the price could target lower levels, potentially around 45 cents or even 42 cents in the following weeks. The outcome of the ongoing legal proceedings remains a significant wildcard, capable of causing sharp price movements in either direction, irrespective of technical patterns, presenting unique risks for traders. For those trading XRP, a cautious approach is warranted. A clear and sustained breakout above 57 cents, ideally with significant volume, would be the primary bullish signal, potentially targeting 60 cents and then 65 cents. Stop losses for such a trade would likely be placed just below the breakout zone. Conversely, if XRP is rejected again from the 55 to 57 cent resistance, or if it breaks below the 48 cent support, bearish strategies might come into play. The developments in the next 2 weeks, particularly around its ability to tackle the overhead resistance, will be crucial for XRP's price direction for the remainder of the month. Chainlink's crossroads, support integrity, and pattern risks. Chainlink, or Link, is at a critical juncture, trading around $16.50 as of June 5, 2025. The key support level is $15 to $15.50. A break below this could signal further declines, while holding above suggests buyer strength. Resistance is near $18, with significant resistance around $19.50 to $20. Traders should align strategies with these key levels. The next 2 weeks are crucial for Link to demonstrate its strength or face a deeper correction.